Welcome back to Infinity Podcast. Today I'm joined by Thomas Stanchak, Head of Sustainability and Innovation at Stoneweg US. Thomas has spent more than 2 decades operating across commercial real estate, asset management, and portfolio scale strategy, building systems where strong design, disciplined operations, and sustainability all reinforce one another. At Stoneweg US, Thomas advanced from asset management into sustainability leadership by proving a simple but often overlooked truth. When executed correctly, environmental performance enhances financial performance. Thomas, thank you so much for coming on the podcast. It's a pleasure.
My pleasure, Zeus. I appreciate the kind introduction, and I'm happy to be here and share a little bit of my experience.
Awesome, Thomas. So, for our listeners who are tuning in, tell us a little bit more about your background and what you do at Stoneweg.
Um, so what I can say is that I've spent basically my whole career in some shape or form in real estate, operations, management, investment, and now in the realm of sustainability and as it intersects with real estate. For my career at Stoneweg here for the last nearly 10 years, I've been focused on multifamily real estate in the US. So that's presented a lot of opportunities. And, what I can say is that, it's starting as an asset manager and, being involved in basically, driving the business plan for the multifamily communities that we acquire and manage on behalf of our investors really gave me the kind of the complete toolbox. So when I transitioned to sustainability across the portfolio, I knew where all the levers were in order to make a difference.
Sounds good. I have a couple of questions I'd like to unpack there. What drove you to sustainability? Obviously, coming in from an asset management standpoint, like why and how did you end up on this sustainability side?
You know, um, I think that you can say why because it's a challenging position. There's fundamentally it's about change management, and that's um, incredibly hard. So why is that? I like the challenge of looking at the way things operate, looking for opportunities for efficiencies and value creation, and I think that that's what the position offered. But it is quite challenging because these subjects are complex, and part of my job is to be able to translate that complexity into uh, information that serves people at different levels and make it accessible and useful.
Yeah.
Um, so that's kind of like that's the journey I'm on, which is going from you know really what kind of underlies all these things is the economic complexity at the intersection of building performance as it relates to energy and water use and utility use, capital planning, um, all those sorts of things I think are fascinating challenges, but incredibly hard to do.
Your background as a asset manager was able to provide you with the nuts and bolts and obviously understanding the complexities of everything multifamily. How has that been beneficial towards your transition now into sustainability?
Um, so I think that I have an advantage a lot of people in my position, um, really don't have, and I would say that uh, the most useful experience to anyone who's trying to um, affect change is to actually have real hands-on experience in operations, understand how real estate works, particularly multifamily real estate, which is unique from other real estate verticals. So, what I can say is that I was sort of born into the business. My dad invested in a number of businesses, including apartment buildings and that sort of thing. So I've spent my whole life. I learned to read and write at the kitchen table with like ledgers and leases. So it's sort of, it goes beyond or before my professional experience, but I think that all of that kind of led up to giving me, all of the resources to really understand how we can both achieve our goals in terms of, improved environmental performance and make it consistent and coherent with real estate finance.
Yeah. And to piggyback off that last sentence anecdote that you just mentioned on real estate finance, I want to talk about the financial case for sustainability and how environmental performance can directly enhance financial returns within multifamily.
Yeah. So, I think that the way I look at it, and that this is sort of been a journey for me over the last 5 years that I've held this role, is that issues like emissions and climate change, issues like water scarcity, and those sorts of things that we're trying to address through sustainability, are fundamentally energy and economic issues. And energy really underpins the cost of everything. And when you look at where we've been, which is sort of in a regime over the last couple of decades, really, where energy prices were pretty non-volatile, where they were pretty consistent, but it was very clear kind of in the math in terms of like emissions and climate change that this dynamic was going to change. And often it's called like an energy transition. And this sounds quite optimistic and quite neat and linear. We're just going to transition the engine of the planet from fossil fuels to renewables and low carbon. Easy, right? And the reality is that it's extremely complex. There's a lot of volatility, and it's really more about looking for ways not really just to reduce energy use or to reduce emissions or that sort of thing. Like that's something that can be measured and it's something meaningful. But ultimately, really what we should be doing is looking at ways to improve performance. And what I mean by that is I don't believe that reduction for reduction's sake is valuable and serves real estate investors and is coherent with a real estate investment strategy. But performance improvement and operational improvement and looking at ways to, for example, more accurately predict reoccurring kind of minor capital replacements and align those with the performance goals. So you can actually create efficiencies in the way that we do business that's consistent with the way, with the goals that we're trying to achieve. And, I know I kind of started with a big macro, but that's really kind of, I think, it's not ideological for me. It's not kind of like a values-based. I think there is an existential risk from climate change that everyone on the planet faces. But I think where there's, an abundant opportunity for real estate investors is to really kind of, it doesn't take too much imagination to look kind of like where we've been and stop making these sorts of linear predictions about the future, because the energy prices and volatility in the transition is going to affect the cost of everything. It's going to affect the supply and demand of everything. And I think that if you bring that mindset, all of a sudden you see a lot of opportunities in leveraging sustainability performance with financial performance. It's consistent.
Yeah. One of the biggest issues I think right now in real estate development is the fragmentation of the value chain, especially as it relates to sustainability. Mm-hmm. From the inception of a project, how important how important is it to bring on sustainability at the beginning, like building balance systems from the beginning, as opposed to like doing it later at a later stage?
Don't assume that just because something is new that it is the best. Like, and that's really, I think, fundamentally developers are assuming that if they just, when you're initiating a project, that because it's new, it's going to mitigate a bunch of potential risks uh, when it comes to emissions, when it comes to energy performance, when it comes to water conservation, when it
Yeah.
comes to all of these sorts of things that affect the P&L. I think that investors need to engage early, and they need to engage consistently and hold designers and general contractors and the project managers accountable for clearly identifying, what we're doing to make sure that we're building buildings that are fit for the future, meaning that they're high performance, they're smart, not in the kind of the old-fashioned means of building automation controls, but smart in the way of, making them ready to adopt kind of emerging technologies that allow buildings to actually understand their own performance and diagnose themselves, and kind of shifting to predictive maintenance, and all the efficiencies that basically come from that. There's also, you know, there's also benefits in terms of considering, you know, doing a deep analysis and considering how you're designing things like landscaping and water retention and parking and all those sorts of things. Trying to retrofit, well, number one, retrofitting a new property after the fact is nearly impossible.
Yeah.
You need to follow kind of like creating these thoughtful plans and creating accountability and implementing them in a way that's coherent at liquidity events.
Yeah.
That's where you make sure that your what you're trying to achieve is properly capitalized, and mistakes and kind of like not really addressing those issues that impact insurance costs, that impact operational costs and affordability for the people that operate or that occupy these buildings. They present themselves pretty quickly once a property receives its COs and comes online. And trying to go back and fix this later, is not the way that I would recommend going about it.
Thomas, you mentioned retrofits. Talk to us a little bit more about the challenges behind retrofitting the built environment.
Yeah. Fundamentally, and I'm not, I'm referring to the existing building stock.
Right.
And, for multifamily, the existing building stock, and we're talking about, properties that are 20, 40, 50 years old, they were not built fit for the future that we're in today. And I think what we've seen is that largely you've seen cap rate expansion on kind of like older properties, and this is sort of this is how that lack of sort of implementing sustainability and managing this has sort of presented itself in the market, and investors are sort of moving away. And really that's just a function of deferred maintenance. Simply, it's the way that historically, multifamily's been around for about 100 years as a type of real estate. And historically, labor's been plenty and cheap. Energy costs have been low, that sort of thing. So being reactive was the most cost-efficient way, just really avoiding replacements and avoiding preventative maintenance, because it was kind of cheap to deal with at those sort of crisis events. Um, and those crisis events don't occur kind of like in a predictable way. Where they really occur and present themselves is at the extremes of weather and the extremes of climate. And
Yeah.
what we're seeing from climate change is that those extremes are becoming more frequent and they're becoming longer duration. So the mechanical systems that make up buildings fail when they're under the most stress and we're dealing with it more often. So I think that going again to making sure you're properly capitalized, but then also looking at the technology that's available in order to manage that. And so the biggest obstacle to kind of making this pivot is that moving from crisis to crisis in that context gives very little bandwidth to kind of like, you know, giving it a lot of thought. We're really just trying to do the fastest, cheapest thing to resolve the issue and move on to the next crisis. And I think that where things are heading and where there's the most opportunity to improve financial performance is increasing the time period between when we know systems are failing and getting prepared to fail, or getting prepared to replace them and replace them with something that's fit for the future.
Awesome. That makes complete sense. Thank you for mentioning that. And there's two notes that I want to unpack there in your answer. You mentioned capital and technology. Can you talk a little bit about how investment managers and developers should position themselves and the work that they're doing to scale sustainable finance?
Yeah. It kind of goes back to a previous question you had about, you know, when is the right time to get engaged on these subjects in terms of development, which is at the design phase.
Yeah.
That is the most cost efficient and effective way to make sure that you're well positioned once you bring a property online. And then again, with existing properties, it's at acquisition or refinance or those sorts of major milestones.
Yeah.
So I think that there's an analog or like an analogy with the kind of the value add model, and you can make that analogy with sustainability, and that is kind of well understood by real estate brokers and the acquisitions teams and asset managers, and it's just kind of making that pivot where energy and affordability and resilience and how that impacts the P&L and NOI is really sort of the new value add. Because you think about affordability, household affordability. So it's not just rent, it's rent and utilities.
Yeah.
So in a regime that we've been in, which is relatively flat costs in terms of energy and low input costs in terms of energy, rent could grow. But when the burden of utilities, and if you're an operator, if you're looking at your per unit costs, you should be able to see very clearly that there is a lot of inflation in this space and it's projected to continue to rise. So it's not really just more about being more efficient now to reduce your per unit or reduce the number of units you're consuming in terms of like utilities. But even if you can maintain flat, the costs are increasing per unit. So kilowatt costs, BTU costs, cost per gallon are going up double digits. And, that combined with pressures from insurance rates and that sort of thing, it kind of should give all the incentive to real estate investors to begin to underwrite sustainability like a value add and be able to maximize rents and not let utility costs compete with the wallet of renters in terms of rents.
Can you talk to us a little bit about technology and the role of tech and how it's used to get the built environment towards net zero and enhance just the built world?
Yeah. And like you mentioned, net zero. Um, I think that that is a place the world will need to be, but
Yeah.
this isn't really part of my focus on a day-to-day basis. And I mentioned earlier, it's not reduction for reduction's sake. So our emissions are this many tons, and we want to be at zero, and we just need to find ways to unplug things. That doesn't really make sense. It's really more about performance, and that's where I think technology comes in. And a very basic example I can make is that largely building energy performance and benchmarking is presented in terms of kilowatt hours used, in terms of intensity. So kilowatt hours used per year divided by the square footage gives you like energy use intensity. And you can use this to compare within your own portfolio or to peers or that sort of thing. And it's a useful tool, but it really doesn't tell you anything about performance. It just tells you how much you're consuming. And I think where there's a lot of opportunity with technologies moving beyond just metering consumption to doing deep analysis of energy use and efficient energy use, and orchestrating that energy use, meaning like grid interactivity, that sort of thing, in order to deliver to people what they need at the time they need it at the right price. And that's it's capitalism, right? It's fundamentally kind of making a mind shift to kind of changing the way that we look at building environmental performance from kind of like whole numbers and reductions from whole numbers, and kind of that approach to what do people need and how do we deliver to them in a way that makes our operations efficient, that makes our inputs and costs efficient, that also support these longer term goals, but does it in a way that's delivering a high quality experience, that's delivering value to the people that are occupying our buildings. And I think that shift in thinking is the way to lead to this sort of like success. And so it's not about I need this much per unit to replace a bunch of heat pumps and that sort of thing. That's part of it, but I think the bigger part is that if you're doing those things and not really getting involved in the technology to actually do energy use analysis,
Yep.
you're not really doing your measurement and verification. There needs to be more follow through with looking at what you're doing, how it's performing, and incrementally getting better at it. And I think that's where a lot of people sort of like they lose sight of really looking at what they're doing and continuously kind of retooling to improve performance and change how they're going about operating.
Obviously, with your role now that you have, you're looking at tons and tons of data. Can you tell us a little bit more about how better data changes decision making, risk management, etc.?
Yeah, there's lots of data.
Yeah.
And that's part of my role. And I think that what what I see as the biggest obstacle is that in most ways today, the way data is presented, it's not presented to the right people at the right time in the right context. There are industry benchmarking platforms that I manage reporting to, because it's it's linked with engagement with capital markets and that sort of thing, which is great, and you're serving this purpose. But where I see a lot of opportunity is to package this data in a way that is accessible and useful to real estate asset managers, community staff, the people that are sort of involved in the day to day. And I don't really see that there are a lot of tools today that really serve that purpose. And that's kind of what my current focus is on. How do I make this information practical to the people that are actually operating the properties and making sort of the routine decisions? It's a hard thing because, you know, I mentioned like energy use intensity and emissions. This is not the language of real estate operations. This is the language of sustainability. And unless you speak the same language, you're not going to achieve these sorts of things. It's sort of a fool's errand.
Wow.
Fundamentally, you need to speak the language of the people that you're trying to influence. And like I mentioned, sort of the change management part. That this is, I think, largely where the whole industry has to shift, and it's, the dialogue needs to change.
Yeah, I completely agree. Kind of a similar question to that. Nowadays, many organizations, they treat ESG just as a compliance thing where they just check the boxes off. Can you tell us more about how investment managers and developers can position themselves to create real, tangible operational value as opposed to just ticking off another box?
Yeah. So first, I guess I want to address sort of the compliance part. So compliance does serve a purpose. And like I mentioned, industry benchmarking largely serves the purpose of capital markets. So when you think about institutional investors, pension funds and sovereign wealth and this sort of these sorts of vehicles, they have their own sustainability goals. And like I said, largely the way that we speak and operate is geared towards serving them. And fundamentally, if they're bringing the equity or they're fundamentally underwriting the investments, we do need to serve them. So I don't want to discount the value of that, because it seems to me that actually works pretty well, and there is a robust system in place to do that. Where kind of going back to my previous comments, where it breaks down pretty quickly and doesn't really serve its purpose is providing the tools to the people at the properties or the people that are basically in charge of decision making, like asset managers for real estate investments. That's where it's actually not serving its purpose, and I think that's where it comes from, is that it's seen as sort of a compliance task.
Yeah.
And what I'm working to do, and where I hope to achieve success, is kind of linking those two. I think that's where the opportunity is. And part of that is really taking the time to focus. Now, I do have personal experience with operations, so that's an advantage. So I kind of, I understand the context well. But, I've also been out of that business for a long time. So taking the time to actually listen to the people that are doing this work, and really listen. Sort of like, what we're doing here, where you're asking questions and I'm giving you my insight. And stop trying to tell them what to do and start trying to give them the tools and the resources, the information, to accomplish what needs to be done. That's sort of like, the way I see it.
Yeah. Interesting. That's an interesting point with the linkage you mentioned. I want to ask you about AI, artificial intelligence, and if you see it playing any role in enhancing operations and everything related to sustainability.
So what I can say is that you mentioned data sets. And I think that that's where there's kind of like the biggest opportunity. So, with our portfolio, there's probably hundreds of thousands of data points that we're tracking and sort of, aggregating to put into our reporting. Um, and that may be really where there's a lot of opportunity to use AI to make that information relevant and useful to the people that are operating the communities and the people that manage these investments. And then in addition to that, like I talked about, the technology to actually do performance analysis. You're This is really kind of a pivot then from benchmarking data, which is hundreds of thousands of data points like for us on an annual basis, to billions, you know? And like, if you understand the order of magnitude and size, you have to have, deep machine learning and agile machine learning
Yeah.
in order to identify those opportunities and to kind of change the way that we do business that protects and improves the performance of our investments. And what I can say is that that's not really just something that goes to a cloud server and kind of like, you port in a type of LLM or that sort of thing. There are some components and use cases of that, but it's a little bit more complicated. Actually, a lot of this stuff will happen on the edge, meaning it'll happen in chips that are networked in a line on circuits connected to devices. So a lot of that intelligence is not happening through, apps. It's actually happening on the devices, which I think is a shift that maybe not a lot of people are looking at today, but really that's really the most efficient way to address this data, is not to send terabytes and terabytes of information to a cloud server for some sort of brute force
Yeah.
endeavor, but really to shift towards technology that's doing this efficiently, kind of on device.
Makes complete sense. I'm curious, Thomas, to see your perspective around the conversations concerning sustainability at the governance level. Like how's it being tackled then, and do you see any changes being done at the governance level within the next probably cycle or the next 5 to 10 years?
From my personal experience, what I can say is that my interactions with leadership and the board and that sort of thing, it's that, they're engaged, and the oversight and interaction with this is pretty consistent.
Yeah.
And I think that the reason that this will continue to be sustained is really a function of sort of what I brought up, is that there's a lot of stress on energy, and there's a lot of stress in insurance markets, and that's largely a function of climate change. And those sorts of issues are sort of underpin everything around sustainability, and that's why it'll continue to be at the board level on the agenda. So it's not really, I'm hoping that the times of value signaling are kind of over, where, you say, I care about the planet and that sort of thing. And I think that comes from some people from a place of sincerity, but really it needs to be more like a regime of action. So, how I kind of look at the past and look forward to the future is that I think that the 2020s will largely be, in real estate and sustainability, the decade of benchmarking and measuring and reporting. And the 2030s will be the decade of adaptation and building resilience and making those changes. And I think that technology will fundamentally give us the tools to be able to do that. But I think that all the pressure will come from really the sources of energy, the demand for energy, the cost of energy, and and also managing exposure to real estate policy expense increases and losses.
Thomas, it's really interesting to see how the UK compares to the US when it comes to sustainability. But I have a question that I specifically want to ask you on Latin America. It's
Hmm.
kind of a lagged, I would say, regime and sector. How do you see Latin America comparing to the US when it comes to sustainability? And is there anything that the US or even the UK can do to promote further sustainability across Latin America?
Hmm. Um, you know, I wonder, I wonder if the changes that we like, or the differences that we perceive, are kind of more, um, more through a media lens or political lens or something like that than actually reality. Because um, how I look at it is that um, all people, so people in the United States, people in the UK, people in Latin America, um, are all people, and they all want all the same things.
Yeah.
And but the United States is different in the sense of it's. I think it's a feature, not a bug. And so um, people look at the United States and kind of like look at our changes in like energy policy or climate policy or that sort of thing, and they kind of get like whiplash. Um, but if you actually, if you kind of take the junior high civics class like a lens on the United States, um, you know, what comes out of federal policy really isn't how business is done in the United States. Business is local in the United States, and and it's dynamic. And, you know, California's economy is wildly different than New York State's economy.
Yeah.
And so that's why I say it's a feature, not a bug, because there's a lot of local governance that I don't think gets the attention, but that's really really, um, what really uh, defines how things operate. So in the UK, I think that, and in other places like Latin America, I think that there's stronger kind of like um, federal governance over these policies. So the message becomes a little bit more coherent, where in the US, the signal really isn't at kind of like the federal level. The signal is actually much more local, and
Yeah.
the way to navigate that is much more local, and understand it is much more local. And I think that that's actually very entrepreneurial as well, and that's why I say it's a feature, because it's part of how dynamic the United States is that it's a laboratory of democracy. It's also a laboratory of technology, and it's a laboratory of energy. And so I think that there is a lot of room in the United States for real innovation and real change and real progress towards all the things that we've discussed, because of the way that we're organized. Um, but I think that, you know, it also is comforting to, um, when you look at uh, other countries like in Latin America and in Europe, that at least the messaging is a little bit more consistent. Maybe that makes people more comfortable. I think that if you're going to invest and operate in the United States, you need to be comfortable with being uncomfortable. Um,
Yeah. Yeah. That's true. That's a great answer. I appreciate that. You talked about what's needed for this entire push concerning the green economy, etc. Within the next 5 to 10 years, how do you see sustainability, like as a whole, within the U.S., specifically across the built environment? Do you see it staying the same or increasing, or more awareness around the subject matter, etc.?
um, so I think that ideally there wouldn't be a green economy and a another economy. There would be the economy.
The economy.
Um, Maybe that's a little bit too optimistic of me. Again, kind of going to my previous thoughts, is that um, we're not going to have one type of energy that kind of powers everything in the U.S. There's going to be a diverse mix, and fossil fuels are not evil. They don't have any inherent intent. It's how people use them, like anything else. And I think that climate change presenting itself will become more and more kind of apparent. We just went through what is the most bizarre sort of heat wave in continental United States that I think that it's shocked people in the Southwest, where we've reached, high temperatures that are kind of like summertime weather in March, where kind of like we're just making our way into
Yeah.
spring.
Yeah.
You look at, places like Colorado that, the snowpack is like, it's not the and all of those things that they're connected to. I think more and more people are acutely aware because they're presenting themselves. There's a drought
Yeah.
here where I live in Tampa Bay, Florida, where you can see the reservoirs where, I would go get coffee and walk my dog and look at the ducks. There's no water there.
Wow.
In the most humid
That's
and wet
crazy.
place,
That's
in
crazy.
the country. It's crazy that there's, that we have, really like a real problem with potable water in Florida. And what's going to be the result of that? I mean, I'm sorry to say, but prices are going to go up.
Yeah.
Like that's how economics work. So we really need to wrap your head around, if you're going to operate real estate, how to operate it, the most efficient way, the most performance-driven way to give people what they want, to serve your customers, to make them feel like you've delivered real value, but do it in a way that kind of makes sure that you're capturing those opportunities before you become a victim of them.
Yeah. That's awesome.
So what I'd like to say is, yeah, things will change. We'll see.
Yeah. We'll see. Like yourself, I like to remain optimistic about everything. So, well, yeah. Thomas, now for my last question to round out the podcast, what should investment managers, developers, and people in this industry master today that's going to be beneficial for them within the next cycle, the next 5 to 10 years, up until we get to 2050 and beyond?
What should they master today? What I can say, what I think is, in terms of trading real estate, so the hold period is only one part, and there's the acquisitions part,
Yeah.
there's the hold period, and there's the sale. Just looking at the life cycle of investments, and I didn't mention refinance in there, but that's an important part of it. What they need to do, number one, is sync the due diligence to those liquidity events and make sure they're properly capitalized to deliver on what they want to accomplish when they go to exit. And I know that I'm kind of very oversimplifying it, but that's really where the stress is that you bring in kind of the economic and kind of climate stressors that I described, or you bring in some sort of like compliance-based performance
Yeah.
after the fact, and that math doesn't work. It needs to really there needs to the people at the table need to set the expectation that this is looked at and it is properly capitalized at those liquidity events to make sure that we're doing the things that need to be accomplished in order to deliver the performance that we promise to investors. And this is a really hard thing.
Awesome. Well, any lasting pieces of advice, something that you want to leave our audience with? Final note.
I think that I get up and do this work every day because I really do think it's interesting. I think that there's a lot of opportunity there, and a lot of ways to be competitive and really demonstrate kind of a different level of competence. And I think that part of like what you mentioned, kind of the emergence of AI and this sort of thing, is that average is no longer going to be acceptable. and really to differentiate yourself as a professional in the real estate industry, or as a company competing in the real estate industry. Really, you're going to need to be able to demonstrate a high level of competence around all of these things, because this is the table stakes now. Average is going to no longer fly.
Yeah, that's awesome. Thank you so much, Thomas. Where can people find out more about Stoneweg and the work that you guys do?
There's stoneweg.com, stoneweg.com. You can also, connect with me on LinkedIn. Often I'll have something to say there.
Awesome. Sounds good. Well, I appreciate the time, Thomas. It was a pleasure getting to know you and getting to speak with you. So thank you.
My pleasure as well.